assalamualaikum. We are from Group 2 in Class 4C for FAR570 project. In this presentation, me and Adeline will be present for Part A, and for Part B will be presented by Akilah and Faid. So, before we start, let's take a look at the group members. Hi and assalamualaikum. My name is Nur Aisyah Nadira binti Hisa.
Hi and assalamualaikum. My name is Nur Adlin Nawar binti Abdul Rashid.
My name is Nur Akilah Shahira binti Muhammad Idrus.
Hi and assalamualaikum. My name is Ahmad Faik bin Muhammad Syafuddin.
First, let's start with the company's background. Sunway Berhad is a Malaysian conglomerate company, or easily be called as multi-industry company. It was formed following a merger between Sunway City Berhad and Sunway Holdings Berhad. Sunway Berhad was incorporated in 1982 and engages in the investment and development of residential, commercial, retail, leisure, and also healthcare properties primarily in Asia and also Australia. Factor to consider having a segmental report is firstly is nature of the product or services, secondly is nature of the production processes, thirdly is type or class of customer for the products or services, and fourthly, methods used to distribute the products or provide the services. There are 8 types of segments in Sunway segmental report. First is property development, secondly is property investment, and thirdly is construction. Fourth is trading and manufacturing, and next is quarry, 6 is healthcare, 7 is investment holding, and lastly is others.
Chief of Decision Making (CODM) is not a person that necessarily a manager that have a specific title, but rather a function that have responsibility to allocate the resources and to assess the performance of the operating segment. It may be the CEO, COO, the management team, or the board of director, and is different from the entity to another entity. So, for the Sunway Berhad, the CODM is Tan Sri Dr. Jeffrey J.R., who is founder and the chairman of Sunway Group. The CODM will review the operating result to make a strategic decision making about the operating segment. The process to identify the segment, whether it's a reportable or non-reportable segment, for the first step, we will be using the quantitative 10% threshold test. So we choose to do the test by using the total revenue. The total revenue is the external revenue plus the internal revenue. So to be the reportable segment, the total revenue have to be more than or equal to 10% of combined revenue of all operating segments. If it does not meet the 10% requirement, so it will be disclosed under all other segment category, which is non-reportable segment. For Sunway Berhad, we have 8 segments. For the first 5 segments, we have property development, property investment, construction, trading and manufacturing, and quarry. 3 of the segment, which is property investment, construction, and trading and manufacturing, they meet the 10% requirement, so they are reportable segment, while 2 other segment, which is property development, inquiry then does not meet the 10% requirement because there is a less than 10%. So they are non-reportable segment. There are another three segments, which is healthcare, investment holding, and others. So one of the segment, which is investment holding, the segment is reportable segment because it meets the 10% requirement, while other two segment, which is healthcare and others, does not meet the 10% requirement because it less than 10%, so it will be considered as non-reportable segment. So overall, for the Sunway Berhad segment, there are 4 reportable segment and 4 non-reportable segment.
By using 75% total revenue requirement, Sunway Berhad need to combine external revenue of identified operating segments must be more than and equal 75% of total external revenue of entity. Total external revenue that less and equals 75% of revenue will be added in operating segments identified as reportable segments. However, total external revenue that more than and equals 75% then non-reportable is included in operating segments. For 75% total revenue workings, all external sales for reportable segments will be added and divided by the total of external sales of all segments. Since the percentage gap is less than 75%, therefore the Sunway Berhad has to include healthcare to get 75% or more, as have been shown in the slide. This is new segmental report that we have allocated the segment according to reportable and non-reportable.
In conclusion, segment report have their advantages and disadvantages. Advantages of segment report. First advantage is transparency and better insight. For the report segment, we can be better evaluate the sustainability and growth of the company and also can monitor the performance of the management. Second, better predictor of profitability. So, reporting segment, it's enable the users of financial statement to be able to predict the future of profitability of an organization, where particularly when the segment are involved in diverse activities. Last, which is third, the segment report can lower the cost of capital. Lower cost of capital will be lower risk. So when the reporting segment, it will be disclose complete information. So the risk of investment in equity of the company that disclose complete information is lower than the risk that investment of equity that withhold the information. Disadvantages of segment report. The first disadvantage of segment report is emphasized on the present. As we know, segment report is being reported not full year. It can be whether half year or quarterly. So it be more focused on the short-term numbers. Second disadvantage of segment report is data manipulation. Segment report can be manipulated their data if the information is being reported through the management style. And also, the data can be selected in a particular situation and then to paint a better performance to send desired message to stakeholder.
Okay, next we move to the part B. The basis of preparation that company use is integral method. The report is prepared in accordance with MFRS 134 interim reporting and paragraph 9.22 Bursa Malaysia as Securities Berhad listing requirement. The interim financial statement should be read in conjunction with the audited financial statement for the year ended 2018. Next, the company accounting policies. Firstly, the accounting policy is MFRS 16 leases. As a result of the MFRS 16, the existing requirement for a lessee to distinguish between finance leases and operating leases under the MFRS 117 are no longer required. This standard introduced a single accounting model requiring the lessee to recognize the right of use underlying lessee's asset and the future payment liabilities in the statement of financial position. Secondly, the adoption of amendment to MFRS 128 long-term interest in associates and joint ventures. Amendment to MFRS 128 that an entity applies MFRS 9 financial instruments to long-term interest in an associate or joint venture to which the equity method is not applied, but that in substance form part of the net investment in the associates or joint venture long-term interest. This clarification is relevant because it implies the expected credit loss model in MFRS 9 applies to such long-term interests.
Next, we move to the types of interim reports. Sunway Berhad presents in their quarterly reports for the financial period ended 31st December 2019 the condensed set of statements, profit or loss and other comprehensive income, statements of financial positions, statements of changes in equity, statements of cash flow, and the selected explanatory notes.
Okay, next we move to the period of the current interim report and comparative for each of the statement in the company. Okay, first we look at the statement of financial position. The current interim report is from 1st October 2019 until 31st December 2019. For the comparative is 1st January 2018 until 31st December 2018. Next, statement of profit or loss, which is 3 months. Okay, for the current interim period, for the current interim report is 1st October 2019 until 31st December 2018. This is for the quarter 4. And the comparative is 1st October 2018 until 31st December 2019. The statement of profit and loss, which is 3 months, for the current interim report is 1st October 2019 until 31st December 2019. This is for the quarter 4. And the comparative is 1st October 2018 until 31st December 2018. Okay, next, other comprehensive income, 12 months, 1st January 2019 until 31st December 2019 for the current interim report. And for the comparative, 1st January 2018 until 31st December 2018. Okay, next to the statement of cash flow. Current interim report is 1st January 2018 2019 until 31st December 2019, and the comparative is for the previous year, 1st January 2018 until 31st December 2018. And lastly, the statement of changes in equity, 1st January 2019 until 31st December 2019 for the current interim report, and comparative 1st January 2018 until 31st December 2018. We look at this table. Only the statement of profit and loss is based on the quarter, and others is used 1 year.
Last but not least, we will talk about the adjustments for interim reports. As at 31st December 2019, the cost of inventories is 2.100946 billion ringgit, while the net realizable value is 1.980768 billion ringgit. So, the adjustment for the value of inventories, we will need to choose the lower between the cost and the NRV. In this case, the NRV 1.980768 billion ringgit is lower than the cost of the inventories RM 2.100964 billion. So we will choose the NRV value for the value of inventories, which is 1.980768 billion ringgit. For the year ended 31st December 2019, the amount of account receivable is 2.122019 billion ringgit. However, the estimated collectible will be only at 85%. So, the adjustment, we will only need to report the amount estimated collectible, which is 85% from the 2.122019 billion ringgit. So, the net amount to be reported is 1.803716,150 billion ringgit. As we can see, this is Sunway Berhad's extraction of adjusted statements of financial position for the year ended 31st December 2019.